What's going on, everybody? Jeremy Ritz here. Courage pays better than fear trading. Thanks for joining me here on this Friday, this last day of February, as we wrap up another month of the market 2025. And this is Ask a Trader, where it's an opportunity for you. Any questions that you have or charts that you want me to look at, you can go ahead and post those in the chat, and I'll get that set up now just to make sure you guys have access to that. And if you don't, you just want to hang out, that's fine too. A lot of times it's just, I share an overview and I don't get a lot of questions, but definitely wanted to put something together here for you guys today. And we're just going to go ahead and get started by pulling up the charts and taking a look at what is happening right now in the markets. Give me 1 second to get this pulled up. We're going to start on the SPX. And let me share this. And here we go. So here we are. So today is Friday, February 28th. And you can see that we've had some significant selling that has come into play here over the last 6 days. So 1, 2, 3, 4, 5, 6. And this really started on February 20th, right after we made all-time highs on the SPX. And typically, as what happens when you do hit an all-time high, you're going to get profit taking, people locking in gains. And that's really what occurred. And this was some pretty steady selling. And we went down a little this morning, and you could see that this dip is a little over 5%. And so there could still be more room to the downside here with this move. And we could see that we're getting a little bit of a green day coming in here today, but you might be asking, well, what is causing this? Well, there's a lot of uncertainty out there right now in terms of the markets, with things that are happening with tariffs, geopolitical events, and as we know, the markets don't like uncertainty. And until there is some certainty around that, we're probably going to get more of the same. And so what we could see here just by looking at the chart is we filled this gap from January 14th, where we gapped up after we pushed down here. And we filled that gap, and that's where buyers stepped in. Now we have to see if they're going to continue to push and move this back up. If this is just a 1 day relief bounce, if we're going to come back down lower on Monday, that has yet to be seen. But what we can see here is that there is nothing below us down to the 200 SMA on the daily. So what I'm going to be watching for is a push higher. And then what happens and how do we respond whenever we hit into that 50 SMA on the daily? And that will be a pivotal spot for the bulls. If the bulls could push it through that, then potentially they can continue back up to all-time highs. But more than likely, what I think is going to happen, it's going to hit that 50 or maybe even the 100, which is below that. And then we're going to just start to come down into that 200 SMA on the daily. Now, that wouldn't even be considered a 10% correction. And we haven't had a 10% correction since 2023, and the market needs to have one. And so in order for us to get that 10% correction, you can see we've got to come all the way down to 55, 30, 68. And that's definitely on the table. There's market weakness out there. The inflation reports in February were higher than expected. We've got the uncertainty with tariffs. We've got geopolitical events. So we'll see what's going to happen. And if we take a look at the QQQ, this is the technology index, same type of thing here. Lots of selling that is coming, and we have pulled back on this guy. Let's see, 8%. So almost at that 10% mark. 10% would take us down here to 486.63. And we're going to be watching here this 200 SMA on the daily for a potential bounce spot, or even this 50 SMA on the weekly. Now, when you start looking at small caps, you're going to see a much different story. This thing is significantly down from its all-time high that it made here in November. It is down 13.58%, so it has more than corrected. It is not in bear territory. Remember, bear territory is below 20%, which brings me to Bitcoin. And Bitcoin actually has entered bear territory because it broke below 20%. And we could see its all-time high here. This was January 20th when it hit $109,000. And let's just measure this out. That is a 28% drop. So that's officially bear territory. And how much lower does it have to go? Is it going to go lower? Are we going to get some buyers that come in here? We don't know. But we can see the candle that's forming here now. It is a hammer candle right off of that 200 SMA on the daily. So let's see if we get some relief here, if we get some buying that comes in. And what I'll be watching here is how does it react when it gets up to that 10-day exponential moving average? Does it get rejected and come back down? Does it break through? And we can see there's a lot for it to work through up above. So again, everything is pulling back. Everything is correcting. And there are a few thoughts out there about potentially what's going to happen in the broader markets here over the course of the year. And there's a lot of investors, analysts out there who say that the SPY is going to hit 6,600 before the year is over. But there's one gentleman that I would like to cite his work. His name is, and I'm probably going to butcher this, Sem Kursan, and he is a volatility master. And what he's talking about is we're probably going to see 10 to 12% correction here in the short term. So again, that puts us between 5,400 and 5,500 on the SPX. And that from there, we will see a bounce higher. We'll see a push out of here. Doesn't mean that we're going to go back to all-time highs, but we're going to have a little bit of a relief rally. But what he then goes on to say is that somewhere during the course of the year, probably in the summer, that we could see a 30 to 40% correction from the all-time highs, which puts us into a bear market. And just to measure this out, to show you, 30% from the all-time highs is right about here. So 4,300. So that's quite a significant fall for it to come down there. If that does in fact happen again, a lot of people have different theories on where the market's going to go. It doesn't mean that they're going to be correct, but you can see that's quite the drop, and that would take us back to levels where the market was in November of 2023. But remember, bear markets bring opportunities, and if it does pull back here and you're a buyer, just like if you would have been a buyer here in the last bear market in 2022, well, look at all the gains that you got to be a part of. So a lot of times we think that bear markets are going to be permanent. They're not, as we could see. You could just go back through the charts, and typically what will happen, you'll get a little bit of consolidation, and then you'll start moving higher. So just keeping an eye on that. And then one last thing that I'll look at here is NVIDIA, who reported earnings earlier this week. They reported on Wednesday. They actually had a double beat on earnings, did very well, but you could see what happened. They sold off significantly. And this was a drawdown from 135-ish to what is that? About 119. So that's a very big candle. And you could see that there's a lot of profit taking, a lot of bears jumped in there to short that. And right now, there's a precarious area where this could drop down to the 100 SMA on the weekly, a price point that it hasn't been at since last April. Can it come back down there? We'll see. It's going to be an interesting next few weeks. And it seems that AI, the whole AI movement, the AI pop is going to be on pause for some time as things get situated here. But really, the NVIDIA, last three NVIDIA earnings have sold off. So could be buying opportunities for this in the long term because it is NVIDIA. It still is the king of the stock market. But that's just where it is now. And then let's take a look at one last ticker, Tesla. Look at how beat up this one is. I have to adjust my moving averages here, but from the all-time highs that it made in December 18th, let's measure its drop. It has come down 44%. So we are getting some buying today off that 200 SMA on the daily. Let's see if it pushes out of here. But that's been quite the drastic pullback. And that's a thing. Some of these big tech stocks that have ran have corrected quite a bit. If you look at Google, Google has come down, let's see here, almost 20%. If you take a look at Microsoft, which I've been waiting to get into a position here, but it's just been weak. But if you take Microsoft from its all-time highs to its lows, 17%. If we take a look at, where is Meta? Meta was on a tear, and this thing got a pullback here. Let me just measure this out. It's not that deep, 13%. And if we take a look at Amazon right here, let's measure this one out. 15%. So things are correcting pretty nicely. And there are opportunities, obviously, but let's keep an eye on where we go from here. What's going to happen? Are we going to get a major correction? Are we going to enter bear territory? It's the story as the markets turn. So we could see that SPX is pushing up. Will there be a rally into the end of the day? We're going to find out. But I didn't get any questions there in the chat. If you have any, go ahead and throw them in there. Just pause a second. And if not, I'm gonna let you guys go. Enjoy your Friday. Have a great weekend. Kind of took the week off from content this week with podcasts. A lot of stuff. Just busy, but I will be back next week. Have a phenomenal weekend. Love you guys, and thank you for joining me for another episode of Ask a Trader. Make it a great day.